Well, good afternoon. Happy Friday, July 24th. Not a very happy Friday for those of us in the world of mortgage. This has not been a kind week, and really coming off of the heels of what was a pretty decent week last week. We got some news that inflation was coming in lower than expected. We got the jobs report the prior week that was a little bit weaker than we had anticipated. So, all that was pointing to good news for mortgage rates. But boy, as of last Friday and moving through the entirety of this week, rates have taken it on the chin. And this is just a result of what has happened to the price of oil. When we started out the week, the price of oil was in the 80s. It got well over $100 per barrel yesterday. It's now just a shade under $100 a barrel, around $96 per barrel. Really, just on the hopes that Pakistan can put together some kind of peace talks between the United States and Iran. This is all around the conflict in the Middle East, specifically the closure of the Strait of Hormuz, through which 20% of the world's oil passes. Let me flip the screen around here. Let me start with mortgage-backed securities. So these are the instrument upon which mortgage rates are based. And you can see what's happened this week, this pretty steep sell-off. This is what's contributing to higher mortgage rates. Let me kind of back up here just a little bit. Can show you where we are. So we're really taking us back to almost a year ago in terms of the level of mortgage rates. So the worst rates that we've seen since the summer of 2025, unfortunately. And again, this is around the price of oil, which now sits around $96 per barrel as of this morning. But you can see yesterday, well over $100 per barrel. The Dow is jumping this morning on news of, or excuse me, this afternoon on news that Pakistan is pushing for peace talks. We could certainly use more of that, but in the meantime, the damage is done. And let's not underestimate the power of the price of oil as it pertains to mortgage rates. I want to show you a quick chart before I leave you for the weekend of how mortgage rates and oil are correlated. Now, it's not an exact correlation, but if you overlay since 2005, the price of oil, which is in the shaded area, this is the price of Brent crude, with the 30-year fixed, which is the blue line, you can see how these are loosely correlated, right? You can see that rises in oil typically accompany rises in mortgage rates. Reductions in the price of oil typically results in the reduction of mortgage rates. You can see this steep rise here in 2022. And then of late, we're starting to see oil jump back up again, and that's dragging mortgage rates up with it. And really, that's just going to be the story of this until the conflict is over. We're going to get data that might support inflation is moderating, and then we're going to probably get some data that might support we should be concerned about inflation because inflation is so materially impacted by the price of oil, not just what we put in our cars and in our airplanes, but oil is in everything. And so it acts as its own sort of category of pushing up inflation. If just this one component of it starts to go up, it drags so many other pieces of goods in the basket of goods and services up with it. And that's a problem when you're trying to get inflation down and you're trying to get mortgage rates down. Unfortunately, for right now, we're faced with higher borrowing costs to the tune of around a quarter of a point increase this past week. That's not an insignificant jump. If I can be of any service to you over the weekend, don't hesitate to reach out. Mark.Milam at highlandmtg.com. Have a good weekend.